The Bank of Japan has just made headlines with a historic 25 basis point rate hike, pushing the policy rate to 1%. This marks the highest level we've seen in 31 years, a peak not reached since 1995. Stick around, because by the end of this video, you'll grasp how this monumental shift is affecting the yen, why Bitcoin investors are anticipating a potential 5% drop, and what to expect from the upcoming FOMC meeting. For decades, Japan has been a symbol of zero or negative interest rates. This shift to 1% signifies a definitive end to the era of ultra-loose monetary policy. The decision was reached with a 7-to-1 vote, showcasing a robust internal consensus within the BOJ to normalize policy and tackle the ongoing weakness of the yen. This isn't merely a minor tweak, it represents a structural shift that global markets are still trying to properly price in. Delving into the details, the 25 basis point hike caught some market participants off guard. Reports from crypto tweets indicate that this is the highest rate since 1995. The BOJ's policy has been notably flat for over 30 years, making this leap to 1% a pivotal psychological threshold for both Japanese households and international carry traders. Governor Ueda's board seems determined to send a powerful message about yen policy, even as the global economy grapples with its own challenges, including shifting leadership at the Federal Reserve. The reaction on X has been quite polarized. Zero Hedge noted a paradoxical movement, claiming the yen tumbled despite the rate reaching a 31-year high. This suggests that the BOJ's actions may be perceived as too little, too late by currency markets. Meanwhile, Coin Bureau reported that the broader crypto market was unfazed immediately after, with Bitcoin holding its ground. However, CoinMarketCap highlighted a concerning historical trend. Bitcoin has averaged a 5.74% decline in the 30 days following the last 4 BOJ hikes. Analysts are closely monitoring the divergence between traditional FX and digital assets. While the BOJ's move aimed to bolster the yen, the persistent weakness in US dollar to Japanese yen suggests a decoupling. Some investors argue that the initial stability in the crypto market indicates a growing resistance to Asian central bank policies. Yet, we cannot overlook the quantitative data from past cycles. If history repeats itself, Bitcoin could face considerable pressure in the coming month as the global liquidity landscape adjusts to higher Japanese yields. Now, the Nikkei 225 and broader Japanese stock earnings are under the spotlight. Typically, a higher interest rate environment benefits the financial sector, but the implications for Japan's export-heavy indices are more complex. Investors are weighing the significance of this 31-year high rate against the backdrop of the Japanese earnings season. If the yen remains weak despite the rate hike, export competitiveness might hold steady, but the rising cost of capital could eventually pressure valuations across the board. Attention is now shifting to tonight's FOMC meeting, which will be the first under new Fed Chair Kevin Warsh. The global rate differential continues to be the primary driver for US dollar to Japanese yen. Despite Japan's hike to 1%, if the Federal Reserve maintains a hawkish stance, the yen's recovery may be hindered. Right now, markets are in a wait-and-see mode, with trading volume on the yen remaining limited as investors brace for the Fed's commentary on global inflation and future rate trajectories. For individual investors, risk management has never been more crucial. If you're holding Bitcoin, historical data suggests exercising caution over the next 30 days due to that 5.74% average post-hike decline. For those monitoring the FX markets, the yen's failure to strengthen immediately after a 31-year high is a warning sign of persistent bearish sentiment. It's wise to avoid aggressive yen buying positions until the FOMC's direction is clearer, and keep a close watch on Japanese financial stocks that may benefit from the 1% policy rate. Looking ahead, we see three primary scenarios unfolding. In our base case, the yen remains volatile yet stable as markets digest the FOMC outcome, while Bitcoin follows its historical trend with a mid-single-digit correction. A bullish scenario for the yen would involve a dovish Fed surprise, potentially driving US dollar to Japanese yen back toward historical norms and prompting a broader crypto sell-off. On the flip side, a bearish scenario for the yen suggests it could continue to decline despite the 1% rate, as global capital seeks higher yields in the US, possibly decoupling crypto from Japanese policy entirely. To wrap things up, the BOJ has achieved a historic 31-year high rate of 1%, yet the yen's response has been surprisingly muted. Bitcoin now faces a historical 5.74% downside risk over the next month, and all eyes are on the FOMC. Make sure to stay tuned to our channel as we track these historic developments. If you found this analysis insightful, please subscribe and share your thoughts in the comments. Do you think the yen has finally found its floor?